G'day everyone, welcome back to Pete's Investing. Today is May the 9th, 2023. This is the spot silver price update. On our trend indicators on the charts for the weekly and the daily, you can see there the weekly is in a bullish momentum, whereas the daily is showing a neutral. I'll explain what that means if you're new to the channel. So each of these, let's go for the weekly first. We'll look at the triple moving average. Moving averages 3, 5 and 60, and on the CCI 150 we've got the moving average 5 and 50. When they're both in the same momentum, in this case they're bullish, this indicator down here shows a bullish movement. When they're both in a bearish movement like they were here, this indicator shows bearish. When there is a conflict between one or the other, in other words they're not aligned, it shows a neutral stance like in this area here. So at the moment, taking predominantly long trades on the silver lower time frames. On the daily, however, notice it's showing a neutral, so basically avoid going long, even though the weekly is saying going long, just avoid going long until we see this turn to the upside. You'll see there the CCI is broken to the downside slightly, and the moving averages on the price chart is also breaking down slightly, ever so slightly. So again, looking at the bigger picture on the daily, I've got a support here at 1991 and a resistance at 2607. And if I zoom in, you'll see here that Fibonacci retracement from that support to that resistance. The price was bouncing around the 23% level for some time. So again, it's currently hovering around this diagonal ascending trend line. If I zoom out, you can see there it's along those bottoms and through those ranges and along those tops. And importantly, if you watch the gold video as well, or if you haven't, go have a look at that as well. Gold is actually what this is showing here. This is the silver chart, of course, but it's reference to the gold price, which is doing something similar. This is actually the divergence on the CCI was a bearish divergence, and the bullish divergence on the price chart. And what that means is when this plays out, which it did, you can see there the price collapsed, and it did actually go in the direction of the CCI. So the reason I'm showing you this and referencing gold, that's currently in play for the gold share price. So go have a look at the gold video and check that divergence out there, and it hasn't completed yet, hasn't failed, but it hasn't worked out either. So have a look at it there and see what it's potentially doing. So again, primarily long positions on the weekly, but neutral on the daily, so avoid taking any trades at the moment on the lower time frames. And I'm looking at the hourly time frame here, and one example would be, again, I'm using the CCI 150 as well as the fractal breakout as a potential entry. So again, if you're going long, assuming both daily and weekly trends were long, you would go long when the candle broke outside of the fractal, like it did there, and so on. And if I zoom out, this is an example of the average down process. So each of these single blocks or steps indicate an entry made into it and an exit of the trade in those little areas. And you can see there the profitability rising. Until we get to this area where the average down happened, we had 2 average down processes. This goes back until September 21. Actually, no, it goes back to this point here, which was around January 22. There were 2 average down methods applied. Now, you'll notice the profitability, there's a drawdown happened there. So what I want to demonstrate now is just basically, if I zoom in onto the weekly, notice here on the weekly it said the last point, you would have had 1 week of bullishness back there. Notice where that on the right, if you would look at the chart on the right, you'll notice the profitability and the chart saying don't take any trades. So that would have been the last trade you could have taken long. In other words, during this period on the weekly, that was showing primarily bearish momentum. So you would have avoided take this. Again, this is only a long positioning on this program, this back testing. So you would have avoided going long until this point there. You'll see that on the right side. That's where you would have started trading long again during those few weeks. So basically what I'm saying is you would have avoided that drawdown had you followed the weekly trend process. So to understand how to properly trade this and other strategies, reference the Patreon page with exclusive access with average down strategies. We scan for stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.